The Bank of Canada prime rate is up. Canadian 5-year government bonds are up. Real estate prices in the last month went up. Housing demand continues to go up. Are rents gonna keep going up? Will the inflation numbers be up this quarter? Will interest rates continue to go up? What else is up? Let's discuss it on this week's short report. I'm not sure if anything else is up, but I do know that tickets for an amazing Realtor event hosted by the Housing Cooperative have just been decreased. So if you're a Realtor, please contact me or reach out to the Housing Cooperative for tickets to be part of this credible real estate event next week featuring hosts from Revel Realty and Remax Escarpment. Let's go. If you're familiar with the real estate market at all, you probably already know that the Bank of Canada has raised its prime rate by another 0.25%. This means that the Canadian prime rate is now 6.95%, which is a significant increase of 4.25% from its low of 2.70 in March 2022, just 16 months ago. A 4.25% increase is substantial, especially when applied to residential mortgage debt in Canada, which amounted to 2.08 trillion in May 2023, according to CMHC. The rate hikes in 2022 had a notable impact on the real estate market, but since February, we've seen housing demands bounce back quickly, with prices and activity gradually increasing month over month since February. In our most recent market report from last month, we observed a 4% average increase in real estate prices throughout the GTA, and in some cities, those prices rose by 5 to 7% just from last month. This demonstrates the resilience of housing demand, even in the face of rising interest rates for prospective homeowners. Many banks and economists, such as RBC, anticipate a mild recession in the mid and latter part of 2023, with a potentially turbulent landing in 2024. This prediction aligns with the rise in interest rates over the last 16 months. If these increases persist, it will be challenging to avoid a further economic downturn. So, what does all this mean in simple terms for real estate and home ownership? Here are some key insights that I've gathered. Number one, the cost of financing a home has significantly increased, as has the overall cost of living. This means that households need to develop strategic financial plans to navigate through 2023 and into 2024, when we expect interest rates to begin decreasing. Number two, the market rebounded swiftly when rate increases paused, indicating strong demand for housing. There's a positive sentiment in the market right now regarding the recent surge in activity and sales. If you're considering selling, this might be a favorable opportunity, especially if you're contemplating a transition from the GTA to secondary markets. Number three, there were numerous real estate buying opportunities in late 2022 that vanished in early 2023. I predict that some of these opportunities may resurface within the next 12 to 16 months, but they may become scarce for an extended period thereafter. Number four, the most significant challenge in this entire equation is the shortage of housing in Ontario, especially for its growing population. Until this issue is resolved, we will continue to rely on temporary solutions that make life extremely difficult for many Canadians. That's it. Thank you for joining me on this week's short report. Enjoy your June weekend. We'll be welcoming our daughter Amelia and my family into this world. May God bless her. All the best to you. Thank you for joining me again for this report on June 8th. All the best.